Welcome, folks, to this Monday edition of this webinar through Epic Street. Thanks again. Special thanks again to the folks at Epic Street for organizing this event. This is, the third or fourth week of these webinars I've been doing for Epic Street. Really enjoy doing them. Folks, I'm telling you, I hope it provides some hope each one of you derive some sort of value from this, whether it's from my comments or maybe you have some conversations with other traders in this room. But I'm telling you, it actually benefits me too. It's a benefit to me. It doesn't benefit me because I get to practice my public speaking skills. I've been doing this long enough. I don't consider myself a great public speaker, but I'm at least proficient. No, the real benefit to me is a review of the day's events. I mean, when I review the events of the trading day over and over and over again, you know, I can better internalize some of the things that happen and use the knowledge of what happened today, possibly as soon as even tomorrow. Not that it always applies. I mean, for example, I may refer today to certain price levels on certain currency pairs during this discussion, and when I create a review of the New York session on any given day, I'm talking about pairs, I'm talking about certain price levels, I'm talking about things, maybe fundamental news events and such that move the markets. You know, as I regurgitate these things, I mean, it sticks. I mean, I create those synaptic connections in my brain that help retain memory. So it's helpful to me too. Anyway, folks, let me remind you first, this is not an alert service. I'm not going to provide any trade recommendations. We're going to conduct some looking back technical and fundamental analysis on today's price action in the currency markets, and we'll take a look ahead tomorrow as well. So today was, relatively speaking, a bit uneventful, but there were some tradable price action. Do not get me wrong, there was definitely some tradable price action. I think I should best start. Actually, you should see my cursor by now. I probably best start with a chart for the EURUSD. I back up one more step and I'll talk about this view. For anybody who happens to be newer to this event, we're looking at 8 different charts. This is the so-called scan view, or I guess you can call it a market overview, that I scan when I start my trading day. I'm trying to get the theme of the currency market. I'm looking at major currencies here, the dollar here, the euro here, the Japanese yen, the Swiss franc, the British pound. Not necessarily, there wasn't anything unique about that order. It just happened to be the order I cited those currencies in. But this gives me a read to the currency market. And 3 of the currencies I've tended to focus on most, especially in recent months, are the 3 so-called safe haven currencies, the Swiss franc, the Japanese yen, and the dollar. And as you've probably heard me say many times before, you probably heard other currency traders and or so-called quote-unquote experts, currency experts talk about before this. The 3 major safe haven currencies that we've been looking for, many traders have been looking for themes in the financial markets, not just currency markets. Themes during particular sessions or particular days. 2 of the common themes have been risk on or risk off. Risk on or risk off. A risk on theme that's prevalent when you see things like European equities rising. In that context, we'll sometimes see the dollar weaken, the yen weaken, and even the Swiss franc weaken, and just the opposite in the risk-off theme. Now, the risk-off theme has worked to the benefit much of this year to date, or through earlier last month. The risk-off theme has benefited the Swiss franc. Well, Swiss franc isn't quite its normal self, as many of you already know, given the significant moves, the initiatives, I should say, taken on by the Swiss National Bank. That's the central bank in Switzerland. Swiss National Bank, for those of you who don't know, have essentially cast a line in the sand at 1.20. Take a quick look at that, and we'll go on to the EURUSD and some of the other pairs I want to talk about. Let me put a line at 1.20 here. Oh, there it is. Got a line at 1.20. Yeah, thick horizontal black line at the bottom of this 15-minute chart with that indicators at 1.20. That's the so-called line in the sand the Swiss National Bank is intending to defend. They announced that during last Tuesday's London session, their intent to defend that level at all costs. In other words, the Swiss National Bank, in order to protect the Swiss economy and and companies in the economy. They do not want the Swiss franc to get any stronger than 1.20 against the euro. So obviously Swiss franc weakness means up, and they would prefer to see the euro Swissy go up. Now whether it's going to do so on the back of some sort of sustained Swiss franc weakness or euro strength remains to be seen. The dilemma that the Swiss National Bank is faced with is that it used to have a lot of reasons to be concerned about what's going on in Europe, and if those concerns still continue on, so linger, that's going to weigh upon the euro. Obviously, weakness on the euro means down for this currency pair. So Swiss National Bank may be fighting a heck of a battle, and we haven't seen this yet. But I'm looking for let's see what happens the next test of 1.20 if that happens next day or several days. Hasn't happened yet, but I tell you right now, and I'll move on. What I do expect to happen, until proven wrong, I expect that given the degree of the commitment made by the Swiss National Bank last week, I expect pretty much what's going to happen on the next test of 1.20. The same thing that happened back in second half of 2009. For those of you who don't recall, especially around May, June of 2009 and continuing to early 2010, Swiss National Bank had a different line in the sand. This one's as 1.5. At 1.50, the psychological level for the Euro Swissy, the Swiss National Bank was flooding the market, in other words, intervening in the currency market, flooding the market with Swiss francs every time the Euro Swissy tested the 1.50 area, and it was like clockwork. I mean, it was any session, any New York morning session when the Euro Swissy tested or did a near test of the 1.50 level, you could almost count on it like clockwork. The Swiss National Bank would step in and flood the market with Swiss francs, and the Euro Swissy would jump at least 150 pips, maybe 200 or more, in response to that. So, I would guess that the Swiss National Bank will do much the same if and when we get another test of 1.20. But who knows? I mean, these are unique times, and this is Europe's in a bit of a unique mess now. So, they may see a losing battle on any given day and decide that if we have a mess in Europe, if European equities, for example, are dropping sharply and Swiss franc gaining some strength in response to that, then maybe the Swiss National Bank waits a day or so for markets to settle down before it does intervene. Some believe that, by the way, the Bank of Japan, or I should say the Ministry of Finance in Japan makes the call on whether or not to intervene in currency markets to weaken the Japanese yen. And some think right now that the Ministry of Finance is waiting for this whole situation with Europe to play out before they decide to intervene again. Although one can also argue that maybe politics is at play there too. They just had a changing of the guard in Japan, and the former finance minister is now the new prime minister in Japan. And so, maybe that's part of the issue behind why the Japan's not intervening or hasn't intervened of late to weaken the Japanese yen. Debating on which pair to start with first. Actually, let's talk about the euro yen. I'm expanding a 15-minute chart without indicators for the euro yen. Talked about a trade during during my coaching session between 6 and 9 a.m. New York time today. I wonder if I can show this on a 5-minute chart. Zoom out. Yeah, I was talking about in the live class a zone between about 104.60 and 104.70. And again, this is a 5-minute chart without indicators. I like shorter-term charts like this to better identify intraday levels of support and resistance. And what struck me about 104.70, and I'll have a line here. I'm going to add some arrows so you can probably see some price action earlier, where this pair seemed to find a ceiling during London session trading around 104.70. And now I've debated I'm trying to remember why I defined 104.60 as the other reason for the 10 pip zone. but I know I identified 104.60. Might have been because it was a fib. I presume that's part of the story. 104.60 happened to be the 50% fib of the move up from today's low to the swing high at about 105.05. Yeah, I guess that's probably the reason. So I would call that's the reason why I did it. So what we talked about during my London lunch coaching session today, between about 6 and 8 a.m. New York time, was along in that somewhere in that 10 pip zone between the 104.60 and 104.70. And the whole idea behind long, not only on this pair, but if there was for anyone who took a long on the Euro USD currency pair, the idea was this. I mean, as many of you already know, that the euro has been under pressure against multiple major currencies, with some exception the Euro Swissy. But certainly Euro USD, Euro Yen, basically under some pressure most days, more days than not, since this current month started. So the idea was that any long you would take on a day like this on this pair would be considered a counter trend long. A shorter term trade, maybe a scalp, maybe a spot type trade that you would hold at most over the duration of a session, probably nothing more. And always being cognizant that there could be levels or sources of prospective resistance where sellers could be lurking. And as you can see happen here today, we got a little bit of a rise in the euro yen. Euro yen rose from the 104.60 area to as high as 105.60. So you get a 100 pip rally out of that. But then once you get soon after the U.S. equity market open, U.S. stocks open with a negative tone. And a negative tone in U.S. stocks wasn't surprising given the negative tone seen in European equities much of the trading day. And so the rally was rather brief in the euro against the yen, and was pretty much same you said for the euro against the dollar. There was a buying opportunity around the U.S. equity market open on the Euro USD. Let me take you to that chart. It was right in here around 1.3620. I've got a 15-minute chart with that indicators expanded here, and I've got a horizontal gray line at 1.3620, particularly because of today's early Asian session highs, which I am trying to highlight with the red arrows on the left-hand side of this chart. So you had that. You had some hesitation there. And what was it? London session trading there. And let me make this trend line a different color so I can highlight this. And you had a blue trend line there. Blue trend line defined by today's low and a higher low formed during London session trade. And that bounce, my cursor right now is situated next to the wick, the bottom wick of a 15-minute candle. That wick was formed not long after the U.S. equity market opened. As I've said many times before in our live class at the FX Bootcamp, I've mentioned it several times in New York session video reviews, and some of you may have recognized it on your own. We've seen plenty of New York morning sessions when volatility increases in the currency market, starting either minutes before or minutes after the U.S. equity market opened. And that rally in the Euro USD, similar to the rally in the Euro Yen I just discussed a little bit ago, it did produce some profitable pips per se, but it didn't stick. It didn't stick. I'll show you why it didn't stick on the Euro USD, and I'll use that as a segue to discuss a trade on the pound dollar as well. So again, long around 36.20 area for a couple of technical reasons at least. And this pair topped out at about 36.90, let's call it 36.90-ish, 1.3690. So there's a 70 pip move. And you had every reason if you took that long to at least scale at about 1.3690. Scale meaning you close a part of the position, maybe half the position, and let the rest run if you chose to do so. Let the rest run at either a break even, or you lock in, say, 15 or 20 pips of profit and let that part run. And whenever you get knocked out is whenever you get knocked out. So going from there, was there a technical reason why the euro flipped just below 1.37? Well, one reason is it's a psychological level. And when I think of a psychological level like 1.37, I think more like a zone rather than a level per se. We've seen plenty of times in the past, going back, we're talking years, going back over years, where the EURUSD, as an example, can turn, in this case, from up to down near a psychological level. It doesn't have to reach a psychological level to find resistance, or it doesn't have to, in the case of a dropping market, it doesn't have to reach a psychological level per se to find support. These psychological areas are more like just that, areas or zones. You can see in the case of rising market, price reaches like 90, the 90 price level, just below a psychological level, nice round number, and then can turn. Or vice versa, a dropping market, price reaches say, let's say if we were above 1.37 and dropping, and we reach say 1.3710, 1.3705, seen plenty of occasions where the euro has flipped from down to up, just above a psychological level. So that was part of the reason, I would guess, that we had a flip there. More of the explanation could be found, or more justified reasons, I should say, could be found on the charts with indicators. Let me take you to those. And by the way, I talked about this. It wasn't just me, but the other coaches even talked about this before it came together. During my coaching session, I was talking about let me expand this hourly chart, because this is really the main point in terms of the reason why, the technical reasons why it flipped. I was talking during my coaching session about the combination of the upper Bollinger Band on the hourly chart. You should see my cursor tracking a downward sloping gray line. That's the upper Bollinger Band. Sort of like an envelope for price action. And when you have a situation like this, where price has been rising much of the European trading day, and the Bollinger Band had been falling, when the two meet, when price and Bollinger Band meet, not always, but often enough, the Bollinger Band will at least temporarily win that battle. Unless, of course, it's a news-driven move, in which case, all bets are off, and even a Bollinger Band like that can turn from down to up and make way for price to move. But especially on a day like this, when it's a Monday, no major news flow, nothing new as far as I've seen really, significantly from Europe, no major U.S. news and such. On days like this, especially on a day being a Monday that's historically known for being the lowest volatility day of the trading week. For those of you who don't know, if you look at volatility by day week, especially on the EURUSD, Mondays tend to be the lowest volatility day. In other words, the EURUSD, the range on the EURUSD on a Monday from high to low, and then on average on a Monday, tends to be lower than the average range for other days in the week. The biggest days usually are like either Thursday or Friday. So Monday is known to be a relatively low volatility day of the week. Now, it doesn't mean you shouldn't trade on Monday, although I know some traders who choose not to trade on Monday. It's just that unless there's news driving the market, the obvious news driving the market, it's safer to be to scale back your expectations about how much a move can sustain itself on a Monday. Anyway, so you have the upper Bollinger Band coming into play there as a prospective, at least temporary source of resistance. Also, note the thick black horizontal line there. This charting is, I'm going to expand this a little bit so you can see the other pivot points. I've expanded this chart to show most of the daily pivot points. That horizontal black line on my cursor next to you now, that's the daily central pivot point. Again, daily central pivot point. So you had a combination of upper Bollinger Band, daily central pivot point, and close to a psychological level in the context of what's been, again, much of this month, a downward trending market. So no surprise, at least a few bears showed up around that combination, again, psychological area, central pivot point, upper Bollinger Band. So the sort of savvy technical traders, scalper / spotter could have been long earlier at the 3620 area that I mentioned earlier, and then short at the daily central pivot. And both traders made about the same amount of pips. So I mentioned a short at the daily central pivot point for EURUSD. Well, a similar setup came together on the pair known as cable. Let's take a look at that. I'm expanding the hourly chart with pivot points, with daily pivot points, that is, for pound dollar. And although the although the upper Bollinger Band didn't quite come into play for cable, you can see that price topped out very close to that horizontal black line representing the daily central pivot point for Monday. And while we weren't quite close to 1.59, the psychological level, sort of in the ballpark. Today's high close to 85, 86. By and large, though, by the way, the cable flipped from up to down about the same way and about the same time, in terms of timing-wise, about the same time as the euro did. Are you long on the pound? By the way, it is worth mentioning the significance of today's low, and Colin, it's maybe at least part of the reason why you went long. I'm going to back out and look at a daily chart for this pair. And I'm going to drop this trend line here so I can emphasize the low from July. Colin, I'd have to think that's part of your thinking, huh? Definitely a logical long, for sure. I do recall that area has been important in the past. Might have been on an intraday level at some time. But yeah, clearly if you go to a daily chart, you can see the July low was right in there. Yeah, Colin, be careful only because although we don't see that much in the way of regular price action during the New York afternoon and into early Asia. But as I recall, a key member of the Federal Reserve speaking this afternoon in about 2 or 3 hours from now. Dallas Fed President Richard Fisher speaking, and Fisher is a noted hawk. And what Fisher is likely to say is, well, actually, he's probably not going to say anything new, to be honest with you. Fisher's was a known dissenter at the last month's FOMC meeting. Fisher objected to the idea of changing the language in reference to the Fed funds rate. The FOMC changed the language in the reference to the Fed funds rate. Instead of extended period and just sort of an open-ended, leave the Fed funds rate low for a while, the Fed made it arguably a more significant commitment. So sort of a form of like verbal easing. The Fed decided to change from the language in reference to the Fed funds rate from extended period to keeping the Fed funds rate for low for about 2 years. And it was Fisher who objected to that, and it may be guys like Fisher who convince, or at least in part, convince the sort of the centrists at the Federal Reserve to stay away from any significant easing policies. In other words, so what? Let me try to bring this into language or in terms that most you can actionable information. If the market gets a sense from Fisher's comments later today, I don't know if it will, but if Fisher gives the market a sense that the Fed is unlikely to pursue any meaningful so-called easing policies, like Operation Twist, for example, which I'll describe in a moment, then the dollar could actually continue its rally. Maybe not so much again before today's Asian session, but it may take a while. It may not be until, say, London Open before the market reacts to Fisher's comments. I mean, that's happened many times before where a key member of the Fed, for example, has delivered a speech and yet the market doesn't respond to it until London's open or the New York session open. But I don't expect actually any surprises from Fisher. But if Fisher does say something significant, then the market chooses to react to it, then that's how it could play out. It would be, I would guess, if anything, it would be a dollar positive. Now, on the other side of the coin, if Fisher says something, well, again, let's do consider that Fisher is a noted hawk. Fisher is historically the kind of central banker more concerned about inflation than about economic growth at the moment. It's been Fisher's opinion that the Fed has already done enough. If and when a guy like Fisher or a central banker or a person like Fisher turns less hawkish and actually sounds a little bit dovish, that would be a time when I would expect the dollar to get notably weak on back of expectations that the Fed will actually unleash, something approaching like QE2 and maybe what could become QE3. Given his objection again to the Fed changing language with regards to the Fed funds rate last month, I don't expect Fisher to, or people like Fisher, to turn very dovish very soon unless things get really nasty. And of course, if things get nasty in Europe, then they can have some ripple effects on the U.S. But yeah, Colin, you have some reason to be a break even. Colin, the other kind of watch out for you is Europe. I mean, what can I say? As Europe goes, so has gone the dollar. Number one. Number two, there's been some increasing chatter about the prospect of some form of additional easing by the Bank of England. Some are talking about the possibility of QE2 from the Bank of England. Now, it remains to be seen whether or not it materializes, and it's probably very, very, very early speculation right now. But it's it's very possible at some point. Very possible. One of the first clues we'll get to how hawkish or dovish, how inclined or not the Bank of England might be to pursue further easing, which would be a negative for the British pound. We'll see that not this week, but next week at the next Bank of England meeting minutes. I believe it's a week from this coming Wednesday. 9 days from now? We'll see the next Bank of England meeting minutes, MPC meeting minutes, and that could provide some clues as to what's on the Bank of England's mind and what might be their next move. And we'll talk about that when we get there. I know what I was going to show you. Of course, Colin's like, Curt, you're coming up with too many reasons why this trade won't work. Colin, I seriously do wish you the best. I hope it works for you. But I want to show you one more thing. Yeah, Frank, thanks for the heads up there on the euro. By the way, cable is back to a psychological level. I'm queuing up a web browser right now. I'm going to open a web page on the CFTC's website. I can actually, while the web browser's opening up and stuff, I don't know I'm using Firefox. I don't know why Firefox is taking so long. But I can tell you this verbally. As I recall, in checking the latest commitment of traders report from the CFTC, which shows positioning by so-called non-commercial accounts, large speculators in the futures and options market. As I recall, there was a notable flip on the British pound, where the market is now net short the British pound, which the market's been for some time sort of neutral on cable or on the British pound. I've got the web browser open in the background, so let me open the CFTC's website. I'm at cftc.gov, again, cftc.gov. I'm going to market reports and commitments of traders. Market reports, commitments of traders. And under commitment of traders, I'm going to current legacy reports under Chicago Mercantile Exchange, futures and options combined, long format. And you can see the address there if you want to copy that. Actually, I'm looking for the British pound. And that's what caught my attention over the weekend. And by the way, a similar move on the relative to the euro caught my attention as well. But look at that. There's some so-called non-commercial accounts. That's a proxy for in other words, speculators, a proxy for hedge funds. So I'm going to refer to them as hedge funds, but you could be official about it and call them non-commercial accounts. Hedge funds have acquired have acquired some 44,000 in short contracts for futures and options, contracts for shorting for British pound, and 30,000 long contracts. So there's more shorts than long. Let's make it simple here. More shorts than long. So the futures and options market is net short the British pound by about some 14,000 contracts. Unfortunately, I don't have a historical chart for this positioning in the futures and options market for the British pound, but I can lead you to where one is, at least one showing about a year's worth of it. And I always forget exactly where it is. It's something like dailymarkets.com, but I'll show you how I find it. I go to Google or any web browser or any search engine, and I type commitment of traders chart. And one of the first results, there it is, dailymarkets.com /commitment of traders. And this provides an interactive chart. Which I'll open in just a moment. And right now I show in euro where there was a significant change as there was for the British pound, where the market, at least as of last Tuesday, in the futures and options market, the market is now net short the euro as it is net short the British pound right now. Let me show you British pound here. So it's the pink line that I'm paying attention to. Pink line represents large speculators, aka hedge funds. And again, the pink, we're net negative right now. We were actually positive, net long just 2 weeks ago. Now the market's net short. And really the futures and options, this is maybe just for futures, I believe. Futures market has been increasingly less long the British pound ever since, earlier this year. Mid-February. Mid-February was the extreme and bullish sentiment. So anyway, Colin, I must say that you have, some things working against you, but it was a valid shot to take for sure. And I realize I've got 10 minutes of my scheduled by previously allotted time. By the way, the U.S. 10-year T-note back at 1.91%. I believe yields in German government bonds, the German 10-year, for example, hit a fresh new record low today, below 1.8%. Boy. And by the way, it's one of the reasons why, one of the contributing factors, I would guess, to the drop in the EURUSD. If you look at the yield on the 10-year German government bond, currently somewhere below 1.8% versus the yield on the 10-year U.S. government bond, that is the U.S. Treasury, the U.S. 10-year T-note yield, still above 1.9%. That's a yield differential in favor of the dollar. Yield differential in favor of the dollar. If and when we see yields in Germany on equivalent government bonds into 10 years, a common benchmark for government bonds, if when we see the German yield rise up, the German 10-year yield rise above the U.S. 10-year yield, that's when you could be more convinced, or at least starting to become more convinced that the Euro bull story is going to take hold and stick. Now, just because we see it in one given day or during one given session, the German 10-year yield does rise above the U.S. 10-year yield, doesn't mean that's when you flip a switch and turn positive. Because we can have some days when it's kind of flip-flopping around and one's above the other and the other is, it can vary. But the bigger the differential between those two yields, the yields on the 10-year German bonds versus the yield on 10-year U.S. bonds, the bigger the differential, the more it favors the currency of the country whose bond yields are higher. And for now, that's the U.S. I'm going to open FX Street's calendar, and we're going to take a look at what's coming up tomorrow. I've gone to fxstreet.com. Scrolling down near the bottom, see they have a button here called View Live Calendar. I'm clicking on that. Oops, wait a minute. This calendar just expanded right in front of my eyes. Actually, they probably cover enough here. That is, cover enough of tomorrow's events. Sorry about that. I did click on something on the calendar, so maybe generating some things here. I must have activated that script I should have activated here. Okay, here we go. I'm starting to go back to the view lot counter because it doesn't show it. I need to expand this calendar to show everything I want to show. There we go. I mentioned the Fisher speech. That's coming up later this afternoon, New York time. We have CPI out of the UK. That seems like the pound has responded less to that than it has in the past, but that's a potential, historically a potential move for the British pound. CPI, Consumer Price Index figures out of the UK. You know, if we start to see any moderation in inflation in the UK, that does help, if anything, bolster the case for more quantitative easing, and is again negative for the British pound. And Colin, back to your long on pound dollar. If those inflation numbers come in higher than expected, I mean that's I would guess it's going to be at least in the near term a British pound positive, unless the market's so convinced that any rise in inflation in the UK is only temporary, and that the combination of slowing global economy plus the austerity measures in the UK are going to eventually slow down the UK economy to the point where maybe it's some more quantitative easing is in store. And really nothing major at all when it comes to U.S. news. Import price index, IBD /tip economic optimism index. None of those things really move the dollar or move the currency market in general in any meaningful way. So, folks, as I see it, maybe we'll get some price action on the British pound during the London session in response to the latest inflation numbers out of the UK. But other than that, we're talking about a market that's probably going to trade rather technically. And the thing that can influence, in terms of news flow that can influence the market, any developments with regards to Greece or maybe even Spain or Italy. Keep your eye on Europe. I've been saying over and over and over and over again, watch Europe, watch Europe. Hey, Colin, you hanging on by a thread here? Well, Colin, I find it fairly common. Let me zoom in on this 15-minute chart without indicators. I find it fairly common that a 1-2-3 pattern is defined by a 61.8% fib. More specifically, the number 3-point in a 1-2-3 pattern. Oops, I just picked the wrong tool. That was a bad move. The number 3-point in a 1-2-3 pattern, very commonly defined by a 61.8% fib. We're a little below that now. But note that we're also not too far from the low established earlier today, which I just identified with the blue arrow. Red arrow near the bottom middle of this chart. So there's a possibility we flip here. Or flip near here. Even though it probably may not have been near your entry, but notice the fibs that I've drawn in the lower right-hand portion of this chart. Let me zoom in on this chart a little more. This fib study I've drawn here from the rise from today's low. That rise up from today's low to what level is it here? Move this chart out of the way. To 58.30. The 78.6% fib of that move up, represented by a horizontal line at 57.85. Although I know your entry is probably right about there, you may choose, if you're that committed to the long, to allow for a test of that 78.6% fib. Now, plenty of traders don't mind at all taking a shot and then getting knocked out and getting another shot later. For certain setups and based on your style as a trader, you may be like, hey, listen, I'm hanging on to this at risk of, you may be willing to hold on to the point where you end up, with a 10 pip or more loss. Now, I don't recommend that on every trade, in every situation, but, in some situations, if you just, depending on your conviction and especially your reasons behind it, hopefully both technical and fundamental, sometimes there's a case for giving it some trades a little more room to breathe than others. Thing is about price action this time of the trading day, it's not uncommon at all for, for us to see some moves where I'd like to put it the way that our chief currency coach, Warren McDonald, said it in the past. The charts just don't tend to work quite as well in the New York afternoon as they do most other times of the day. So do not be surprised if, I kind of say this jokingly, do not be surprised if the market chooses to ignore a 78.6% fib on cable during the New York afternoon. I'm looking at the time, and actually my clock's maybe about a minute or so off. But my clock, it's 1:45 p.m. New York time, and my scheduled 45 minutes of time has come to pass. If anyone has any questions or comments, either a question or comment that just popped into your mind now, feel free to ask it. If you posted a question or comment earlier you want me to respond to, but I missed it, please feel free to post it again. Otherwise, I'm about ready to wrap this show up. Mr. C asks about yields. Can you expand upon that? Collins, same time tomorrow. 1 p.m. New York time tomorrow. Same thing Wednesday. And then Thursday, I start around the Asian session. Actually, it will be Friday for many of you. I do a webinar and about the start of Friday's Asian session. Well, yeah, Mr. C, that what do you call it? That phenomenon, that pattern, that sort of thing, that applies to lots of currency pairs, not just the euro and the USD. Hey, Mr. C, if you're going to be around tomorrow or Wednesday during this webinar, I'll tell you what, I'll bring a chart. I'll draw up a chart showing a plot of those two yields, the U.S. 10-year T-note yield and the U.S. German government bond yield. And we'll look at that chart relative to the euro. I'm just saying, I'm not trying to dodge your question here. I'm just saying it would be easier and probably more effective to do the explanation, with the actual seeing the historical yields versus just giving you a verbal. Yeah, and I think with that, I think I'll wrap it up. Thanks again to everyone who joined us during this session. Thanks again to the fine folks at Epic Street for making this session possible. Appreciate their support, as should all of you. And have a great day. I'll leave the charts up for a few minutes, and I'll be around to answer any lingering questions or comments. In the meantime, have a great day. Cheers.